second episode of Financial Wellness. I am Wango Morioki, a social media manager, content creator, and digital marketer, and I'm again joined by Jastine. If you watched the first episode, you are familiar with her. Again, I'd like to mention that I have done a series on HR, which is up on my Facebook timeline at Wango Morioki. Kindly go watch. And we are here for enriching, empowering, enlightening conversations. So this second episode is on savings. So, Justine, how is your saving life? Please tell us. Me, I do. Hey, Apple.
So, yes, my name is Jastine, as she had said, and I interacted with you guys in the previous episode. So, I would say being a finance and accounting analyst for a while now, it has automatically given me a discipline. So, right now, I would say it is up to, let's say, 80% disciplined. My saving life is, let's say, 80% disciplined. Yeah. And I'm still a work in progress, looking to be at 100%. Where are you? To be at 100%. Where are you?
Hey, me, I'm at 5, but too late.
Yeah, savings basically start with the right mindset.
Yeah.
With the right mindset, then you'll know why you're saving. So first of all, have goals, and they can be multiple. But as you said, Corona. My first reason to save would be for emergency.
Okay.
Yeah, for unexpected emergencies. For example, job loss. You could it's not even Corona. One day just everything could go south, and at least in your account in that time you should have like up to 5 months basic operating expenses. Money worth that amount. So saving is quite important.
So
very important.
Dive into that. How important is it to save?
It's very, actually,
it's
very with a capital letter. It's very important to save. Whatever little money you're earning, it's as I said earlier, live within your budget.
Okay.
I mean, if you find you're living too much expensive, just following the 50, 30, 20 rule.
Yeah.
Saving is at 20. So if you're not saving 20% of your income, my friend, you're in trouble. Yeah, so saving is very important. So I would, basically, let's talk about why we should save.
Yeah.
Yeah, the first reason I have said is basically to meet emergencies such as job loss.
Yeah, sickness.
Yeah,
like
sickness.
cancer,
For ladies, we can get pregnant anytime. You don't want it to find you very unprepared.
Yeah.
So just have an emergency fund.
Okay.
Some other reasons, to meet your financial dreams. Like for example, if you want a wedding, you need to save up for a good wedding. If you want a car, you need to save for a deposit. If you want to start studying, you have to save up. Yeah, so basically there are very many reasons to save. Also, if you want to become rich, you have to save.
Yeah. You really have to.
Yeah, because now you have to invest. And how do you start investing unless you have savings?
Okay, so you will say the rule of saving is at 20%.
Yeah, it's a 20% minimum. You can do up to 50% if you're a student and someone else is taking care of your rent, and all that. You can do up to 50%.
Okay.
But when everything is on you, I would say 20% is the least.
You should save.
Yeah.
But okay, should you always save with a goal in mind? Let's say I'm saving to buy my gown, or should you also save with no goal in mind? Like you just put your 20% without, you may not have anything even projected for the 1 year, but you're just like, okay, let me just put my 20%. Or should you have your 20% and then now start saving afresh? If I want my camera, if I want clothes, what is the gray area? What's the balance between the two?
For me, basically, I would say this 20% is just for emergencies. You see, for me, this 20% would basically refer to emergencies. Like you're saving 20% each month for emergency. Then come a point where maybe your phone is stolen. Not that you have a phone and you're buying another new phone. Come a point your phone is stolen and now you can't start asking people for money to go and buy a new phone. You'd go take some few dollars from your savings and buy a new phone. But then if you're saving for another goal, like let's say, wedding, or you want a trip to coast, you have to forgo. Now that's where you now have to open another account. Either maybe not even opening an account, you can even do an M-Shwari, lock savings. You can just do an M-Shwari and say, I need 50 Gs for a travel 12 months from now. Then you'd know out of this other 80% of your income, how much are you able to save per month? Then make it your goal. This 20% is for like ikuange tu kwa bank account yako in case of any emergencies, you're not thrown out. And then this 20% accumulate, you can even invest in money markets, or you
can do
some other things, but not make it your disposable income.
Okay. Interesting. And I would say when you're opening a savings account, be it in a bank, be it in a circle, be it, what should you look out for? Is it the interest? Is there anything beyond interest?
Mostly it's interest.
It's interest, yeah.
And accessibility. In this not really accessibility, because most savings accounts you can't withdraw more than 4 times.
Yeah.
That is the beauty about it. So you have to be disciplined, and most of them you have to do over-the-counter withdrawals.
Yeah.
So if for me it's interest, and also you would have. I prefer having conversations with people so that maybe this bank is offering this bank is offering. Just do a basic research and know what works for you.
Okay, and in the cases of that 20%, like you said, it's open. You can decide you want to venture into money market, you want to venture into various investments, or how do you call them? That.
Yeah.
You're open. So is it a conversation you should have with the bank, circle, agency that you're saving with? Is it a conversation you should have, like, if my money grows to up to 4 million, what are the investments option you as an organization have? Is it a conversation you should have before you save?
Yeah, definitely. Before opening an account and setting a goal, you obviously know what you want. Go to the market, compare, always compare, and find what suits you. Most people are always ready to give you this kind of information, so that this is the right step for my money. And you can even do a background research on maybe how much interest has it been earning for the past, like, let's say 6 months, just to be on the safe side. Okay. And also learn to invest on stable economic, because if you're not like a finance, profession, then you're not always up to date on these things, like how is the interest, how is the, today CIC money market performed like this, today ICA did this. So if you don't have time to do that basic research, you can even go to a finance professional, or you can even go to the individual. But if you would prefer to go to an individual, someone would just sell their product. But the good thing is just do a basic research. Just ask people who are on board with the rates daily. Then give you a stable economic place where you're going to put your money, and be safe that at any point interest yangu haitapungua below this